Welcome to today's 24-hour global financial update. Today's focus: U.S. consumer confidence hit a new low in more than 2 years. FOMC meeting, Germany's debt plan, G7 warned Russia to cease fire, U.S. stock funds experienced the largest single-week withdrawal this year, and gold prices hit a new high. First, U.S. consumer confidence hits a 2-year low, and the Federal Reserve's interest rate decision will be a decisive factor. Last Friday, March 14th, the preliminary value of the University of Michigan's Consumer Confidence Index for March fell from 64.7 to 57.9, the lowest since November 2022. The one-year inflation expectation rose to 4.9%, the highest since 2022, while the 5-year inflation expectation reached 3.9%, the highest since 1993. Consumers' expectations regarding their financial situation have dropped to an all-time low, reflecting widespread concerns triggered by tariff policies. Next, the market is focused on the FOMC meeting scheduled for March 19th, where the Federal Reserve faces a dilemma between inflation and growth. If the unemployment rate begins to rise in the coming weeks, the Fed is likely to focus on growth issues. At the same time, the market expects tariffs to push inflation up by about 0.5 percentage points, indicating that inflation may further stray from the Fed's target of 2%. Secondly, a preliminary agreement on Germany's debt financing plan has been reached, leading the market to lower interest rate bets. The leader of the conservative camp, Merz, and the Greens have reached a preliminary agreement on defense and infrastructure spending. The Parliament will vote on the new agreement this Tuesday. The agreement specifies that the infrastructure fund will amount to 500 billion euros, dedicated to new projects, with 100 billion euro allocated to the government's existing climate and transformation fund. This funding will be financed through debt. Analysts point out that this agreement is expected to boost Germany's economic growth, but it also poses the risk of increasing debt burdens.